Well, welcome back, everyone. This week is kicked off with markets quite indecisive. Let's take a deeper dive right into how markets have been functioning today and what does it mean into very important data, inflation data, producer price index data tomorrow morning, and I think more importantly, the consumer price index data on Wednesday morning. Now, what you're looking at in front of you is three time frames of the S&P 500 E-minis, the futures, with a elegant, straightforward strategy overlaid on price called the simplified swing signal. Some folks like to call it the super swing signal. When you look on chart, you've got a down triangle and an up triangle. And in the sub chart, it's kind of like a battleground. The lower half of the channel is homeland. The upper half of the channel is battleground. The red line, the triple S line that I'm tracing, are the soldiers. The dash black line are the generals, and the king and the queen are the blue line. So if you follow the analogy, trading is war, for example, when we look at the battle starting, ideally, we see the battle being planned and actually starting in the very bottom quadrant of this four-quadrant channel on a daily chart. Now, what that does is it gives us one of the highest probabilities for continuation to the center and through, allowing the soldiers to conquer land. This would be the second best territory where we are right now for this kind of a cross that happened about a half dozen days ago. Now, when you look at the signal on the daily chart, we're in a buy signal state. The triple S channel is sloping up. However, when I take that time frame down to the 4 hour, as you can see right here, the channel is sloping down. And it appears that the battle has already been won and the soldiers have conquered a lot of territory for their king and queen. And in fact, the king and the queen are on a tour of the spoils of their victory. When you consider that juxtaposed to the daily chart, it implies that there may be some difficulty rising and just blasting off. It would require a catalyst that is going to break technicals, if you will. Now, inflation data could do that. However, we have to operate on the basis of principle, and past behavior does not necessarily mean future results will be the same, but they may rhyme in this particular modeled case. When you look at the 1 hour chart, which tends to help day traders and helps us inside the day, looking out 3 to 6 hours, you can tell very clearly that we got our buy signal back on the second. It looks like, around the 2nd or 3rd of May there. And you can see that it happened in the afternoon. And then, of course, it was followed up by the 4 hour chart signal, which was then followed up by the daily signal. Now, there's alignment across the board. However, the posture of the 4 hour chart, which looks out 3 to 5 days, tends to give us a cause for pause. And the beautiful part about the elegance of the tool here is we can gauge intraday, intra-week, and week over week likely directional outcome. And as it sits right now, we're aligned in a buy signal state across all three of these key time frames on the most important index. However, we know very clearly that there's a bit of an issue on that 4 hour chart. Very likely, we would need to see the soldiers come down towards the center of the 4 hour chart channel. And that's a bit of a ways down, that's to be sure. Likely, one quadrant at a time, and it may only require one. We've got a marketplace indeed that is still bullish. In fact, the point here is buy signals are aligned, but there may be a cause for pause. And this could be a moment where we get a wobble as we move into the key inflation data, really tomorrow morning at 8:30 Eastern PPI, and then Wednesday morning, we get the CPI data, which I think may have some more risk associated with it. Let's move from here and take a direct look at the NASDAQ, which wasn't cooperating and then started to cooperate. I'm flipping the charts just to the NASDAQ futures here, and you can see that we're holding above that 18,250 key level. We haven't got that same cross on the NASDAQ as we do on the S&P. So there's a misalignment between these two key indices. It is in weight, but it is not a signal yet. And when I take a look at the 4 hour chart, and the 1 hour chart, well, they both did what they needed to do, but the same status, that same warning status presents. In the case of a market that receives decent news tomorrow that producer prices don't necessarily come in hotter, as oil did come down for about half the capture period for the PPI data. We saw oil come down for half the month of April, as you may recall. Well, that may play a role in softening any negativity and allowing the dollar to stay behind or indeed make a weaker move and yields to come down and for a positive move to continue and potentially be signaled on the triple S indications for the NASDAQ tomorrow. That indeed would allow this market to hold up, potentially push up a little higher, allow that 4 hour chart to get really super extended, getting us into that place where the CPI data, well, is probably then going to be a negative. Now, if we get a pullback on the S&Ps tomorrow and we start to work off this key extended condition into the end of the day, I'll be sure to update you as to what that means for Wednesday. Now, we utilized these tools on these time frames to identify some very unique items that were able to outperform the market dramatically. One of them was Camping World Holdings. It did fairly well during the day, made a move that effectively was about $1 on an intraday basis on a low double-digit price play. I'm going to be sharing with you how we can use multiple time frames to gauge where we are in a trading phase or cycle with major data, major market transitions. And I'd like to invite you to that class right now. I'm going to be doing it very specially for you this Wednesday, and it's going to be on Wednesday, May the 15th. We're going to be doing the class at 12 p.m. Eastern time. So 12 p.m. Eastern time, that's midday for North America there overall. And on the Eastern side, of course, 12 p.m. Eastern time is when it starts. And I'm going to be sharing with you how I use strategies overall on the tools you just saw, how I can combine them with incredible scanning and AI technology to, in a few short minutes, identify where the market is, what's the next likely outcome, and of course, securities that may have a better chance to outperform the market. For both day and swing traders, for accounts of all sizes, from small to the moon, and from acumen, from newer folks approaching active trading that are looking for solid entries, how to stay in a position, and how to understand when it's run its course. Of course, managing risk along the way to executing a higher probability trade. I look very much forward to seeing you at the class. It starts at 12 p.m. Eastern time this Wednesday, May the 15th. It is not recorded. It is a do not miss. And as you've seen me trade live, come to you in videos like these, showing you how I do and where I get in and why. Well, I'm going to be showing you stuff like that on Wednesday as well. Simply go to becomebettertrader.com/yes and join me for that class. Looking forward to seeing you there and looking forward to keeping you updated on the market machinations as we move through this week. Have an incredible rest of your day, and thanks for watching. Bye for now.